Good morning, everybody. I am Michael Filighera. I am with LogicalSignals.com and TradersHelpingTraders.com. And today I wanted to make my presentation, and the title is The Battle for Your Mind. What is your S.E.T score? But as I begin, I am really pleased that I am following the previous presenter, because I am really just going to build on one of the major points that she made, and that is believing the lies. So what I mean by the battle for your mind is really us, and it's the negative elements that come floating in as thoughts that grab us and put us into believing lies. And once that happens, we tend to drive by fear and doubt and those lies. So having said that, let me go back to start. That there are many people that they want to come in and they want to trade because they hear about everything that's going on and everything that people are doing and making tons and tons of money. And so we build ourselves up. We say, I can do that. I can learn that. And they are also pulled in by the fact of what amount of money they can start trading with. And I've seen ads that basically state that, oh, come on in with $50, you can trade Forex. And these are lies. And it's really just a means from which to separate money from you. But having said that, I, along with Rich Friesen, and a small group of people, and Rich Friesen is from My Muscles Academy. And we decided that we really needed to have a system whereby each day we could do a simple exercise that would really help us fine tune how we are approaching the market that day. And what I mean by this is that sensations, emotions, and thoughts, that's the S.E.T. Those three really do affect what you're going to do and how you are going to act and what your responses are going to be. And going back to the previous presenter, one of the main things is like believing the lies. So you slip into the darkness when you believe the lies that are pulling you into it. And that is so very true. And often you've got a millisecond to pay attention to what's coming in and to make a decision to reject it or accept it. Now, old habits die hard. They really don't want to leave you. And why? Because for years, we have based our lives and our movements and our actions on those lies. For example, you'll never amount to anything in your life. As a kid, I don't know, maybe you heard that. You heard it pounded from your teachers, you heard it pounded from your family, et cetera, et cetera. Or, I can't do this, it's too hard. Those are lies, because the answer to those lies, if it's too difficult, educate yourself. Find out how you can do it. Find out what mechanics are, et cetera, et cetera. So, going into that battle, you need to really prepare yourself with every tool you can get to make yourself successful. And so having a positive attitude is paramount to achieving all of these things. When we drop into fear and we're afraid to do something, that's what is going to rule your actions. And often that could really produce a reaction you don't want. And I'm just going to pull this into real time, because how I look at all of this, the psychology and the trading and everything, is to actually do it live. I can make a presentation for you and really go into detail without you seeing it in action. So I'm just going to say, maybe right now you think the market should come down And so you say, okay, and this is the NASDAQ, by the way. So you go in and you say, all right, I'm going to sell this. Now you're in. And you're like, oh, good. Oh, see, that worked for me. But now it's going against you. Now, you've entered this trade maybe without a stop in mind, without an exit level, without knowing, well, what do I want to make out of this trade? What am I willing to give on this trade, et cetera, et cetera. Right now, the trade's going for us. So you're like, oh, wow, that's good. I'm going to go get out. So now you're out, you've made. And I'm really, and so now you think your next move is to buy the market. So you go and you decide, well, you didn't get in. Am I going to chase it? No, let's just see if I can get in, et cetera, et cetera. Now, what can happen when you decide that you want to get long? And maybe now you're like, oh, okay, now I'm in. Okay, let's just see what happens. And thoughts are going to start flowing in. Because if you entered and you presented this and you're like, oh, crap, what's going on? Do I need to add? Yeah, maybe. Okay, I'll add another contract here. See if I can get this. Oh, good. Oh, man, what just happened? Oh, no. Oh, no. Do I add again? So you can see how your emotions can change. Now you're beginning to hope that it goes up. Boy, I'm long. I really need this to go up. Now, without having a goal or a plan for this trade, I'm now nervous because, well, I'm down 200 bucks. Oh my, I'm now going to be down more. Where do I get out? Where do I stop? Well, what happens if it goes back up? You know, I don't know what to do. Now you're frozen. And this happens so quickly. It happened in the last minute. So what my point here is that without a significant plan, you're still waiting. And now you're searching for, well, it's gotten down to this moving average. It should go back up right now. I'm going to buy another one. Now you've got 3 contracts. And you still haven't determined what is my goal? What do I want to make on this trade? What am I willing to lose on this trade? But you're still convinced that this market's got to go up. And you know what? Here's the bottom line. You might be, but how long are you going to wait? Oh, good. Look, it's coming back my way. It's coming back my way. I'm okay. I'm okay. Now, you might think, well, okay, it's still going to go up. I'm okay with this trade. I'm going to add another contract. Now you've got 4. Not sure what your limit is, but again, you've done this without a goal on what you're willing to risk and what do you want to make on this trade. So now let's just say you're like, oh God, I can't take it. I can't take it. I can't take it. So you hit the close button. You're now down $845. Now here's the major statement I want to make about doing that. Your goal may have been, I want to make $100 on this trade. So you've just risked 900 actually. So you've got a 9-to-1 risk reward ratio backwards. And now you're wondering why I'm not successful. Okay, let's go back to what I was talking about, the S.E.T score. What that suggests or what that means is your sensations, your emotions, and your thoughts. And what we came up with was to determine that we really can go in each and every morning and look at what our sensations, our emotions, and our thoughts are. So we developed a scoring system, and say, which really goes from 0 to +5, 0 to -5. And then we take an inventory. So we kind of go in and we look at what are my sensations right now. My sensations are, oh, I'm feeling a little bit fearful. I'm a little bit hesitant. I'm tingly. I got butterflies. These are sensations. It's our body's reaction to what's going through on our minds. And we score that. And if you're feeling fearful, you're feeling unsettled, perhaps you've got a bit of anger going on. Perhaps you got into a spat with a spouse or a coworker or something before you sat down to trade, and you're now kind of getting into this, I'm feeling anger here. And if that's what you're feeling and you give it a decent score, like for example, you might say that, well, for my sensations, I'm going to give that a -3. I'm not feeling super positive. I got some negative. I got stuff going on. Then we go and we look at our emotions. And again, what are the emotions? Are we feeling gleeful? Are we feeling happy? Are we feeling supportive? Are we feeling secure? Are we feeling anger? Are we feeling headaches? So we're feeling, we got pain. Are we, all of the different emotions that can come in. Are we feeling kindness? Are we feeling love? Are we feeling hate? Are we feeling anger, et cetera, et cetera? So we got both sides of that scale. Then we will put a score on that. 0 to +5, 0 to -5, both sides of the scale. And we're already a -3 on sensations. Now we go to the next one and we're saying, I got that anger thing going on. So we're going to give that a -3. Now you're -6. Okay, last, thoughts. What are our thoughts in that morning? Are we walking in going like, I did my homework, I got my resistance, I got my support levels, I know where my moving averages are, I've got my point of controls in there, I've got my value area high, my value area low, I've got an idea, I did my analysis pre-market, so I have a thought process of where I think this market should go today and how it should get there. If you follow Elliott Wave, I've worked out my Elliott account, everything's all set up, I'm ready for today. That would give you a decent score. But what are the thoughts really kind of going through? I had a fight with my spouse this morning. We disagreed on something. This is something we keep going over. I really can't deal with this anymore, blah, blah, blah. Or you know what? I woke up with a headache this morning. It's such a pain in the butt. Boom, boom, negative, negative, negative. So you've got to score that. And I'm going to say that if you've scored negative on your sensations, negative on your emotions, you're very likely going to score negative on your thoughts. So I'm going to give that a -3, a -3. You now got a -9 out of a possible +15. That then allows you to make a very serious choice. And that choice is, do I really want to trade today? And if your answer is yes, then you must become aware of what is happening in your mind. Because again, folks, the battle is for your mind. And we talk sometimes about how we can self-sabotage ourselves. This would be one way. We make a determination. I know I'm feeling bad. I know I'm negative, but I really want to trade because I really have to make money. You're beginning on a negative. Now you're going to focus on your P&L. And is that really the easiest way to trade? No, it really isn't. Because you already let your first trade go against you because you didn't have the requirements, really, the basic requirements before you enter each trade. What's the goal of the trade? P&L wise, what are you willing to risk? What do you want to make? If you're only willing to risk $100, it's because you want to make $200. You try to always operate on a 2-to-1, risk reward. You really got to get in there. So you're going to have to settle that within yourself. What are my goals? How do I work out in that risk reward? Maybe your goal is, I've got this new system. It's helping me with moving averages. I need to really follow my moving averages today, no matter what. Because now you've got to set up a system for yourself to where you're not going to focus on the P&L, which already is coming from a negative point of view. So now we're going to build in some thoughts. And again, going back to the previous presenter, boy, did she have some superior suggestions on what we need to do. And hers are more in depth in terms of what you need to do before you sit down to trade. But when you are trading and you find that you've dropped into the negative, that you've dropped into fear and doubt and anger and et cetera, understand and know, I haven't found anybody who's truly strong enough to go at a market with all of that negative pushing against them and do it successfully. It's when we start to make mistakes, when we attempt to go at something when it really shouldn't. And what'll happen is it's like, okay, guys, I really think you're going to go back down again. All right, I'm going to sell here. And then you're going to decide, well, maybe I'll add. Keeps going up. All right, I'm adding. Now you're up to 2 contracts because you think it's going to go down. Oh, good. Look, it's going. And let me see. Okay, I need to add another contract. Good. Now I've got a good. Come on now. I need to make back all this money. Maybe you're going to be right. Right? But now you're going to hold. I'm going to hold this. Okay, so maybe it'll bounce here. Maybe it'll bounce here. If I get a little bounce, I'll add another contract. If not, I want to make all this money back. Oh, I'm there. I'm getting there. This is an example where actually it is working for you, but we're not out of the trade yet because you still see that we were down to 800. Now we want to make that back and we want to do it all in one trade. Okay, I'm going to add another contract because, well, we got up there, but we're futzing around these moving averages. I should be okay. And now we're going to see what we can do. Uh-oh. Well, I'm going to hang on. Oh, what's going on? Oh, man. And this is how quickly these emotions are going to flip and fly on you. If it starts to go back down, you can be like, phew, okay, I'm okay. In fact, I'm going to add another contract. Okay, now back to 5 contracts. That's my limit. Okay, guys, let's see what we can do. And now we sit and we wait. Now, hopefully this could work out. But I want you to notice one thing. I, as the trader, took additional risk on this trade. This time it's working out. Now I'm going to let this guy run, right? Because we got to, cut your losses quick, let your winners run. But it's not understanding the NASDAQ in one respect. Because yes, this market can continue to come down and that would be awesome. But you've only taken off one because maybe your next exit level is down here at this sequence. We're going to put one in there. Let's just see how this all balances out for us right now. And then try to set it up differently. So right now you're feeling good. That fear has subsided and you're okay. Now, have you put a stop in to where it's like, oh, I'll get out of this trade if the market comes back? I got 4 contracts left, and let's see, I want to definitely put my, oop, that was wrong. I wanted to put my buy stop right there, buy stop. If I had put it in as a market if touched to sell for, but I'm not going to put a stop there. Maybe you did, maybe you didn't. But if you're already nicely in the money, then you should protect against it coming and taking it all back. This, I feel, is a big mistake that most traders don't do. Because I'm in it for the long haul. I really want to see this trade goes down because I don't want to be taken out of this trade early. Okay, I get that. But now we've basically we're getting down to a level where we've made our losses. And we can see the market's starting to waffle a little bit. What do we want to do? So again, your sensations, your emotions, and your thoughts are going to convict you and rule the day. When you can approach a market and sit down to trade without that interference, it's bliss, because you're going to see things clearly. You're going to put a stop in. You're going to have a goal as to where you think the market should come. And you're going to be okay with it. If this comes back and takes us out at 625, which is where our stop is, okay, we're still down, and that's all right because we were down 800 before. Now, here's the other side. You're now condemning yourself because you had all the money and you let it go. So again, I'm going to tell you, this is thoughts, emotions, sensations that are now going to come back at you because of how you did that trade. But when we can get in alignment with our sensations, our emotions, and our thoughts, and then make a good decision as to, do I continue to trade, or do I stop for right now, take another little assessment of where I'm at, see what I can do about getting out of it. So often that would suggest take a break. There are days in the market where it's what my trader pal and I, we call a box of doom, or as I like to call it, a box of crap, because it's just not breaking in either direction. So it goes down towards the bottom of the box, and then it goes up towards the top of the box, and we're just waiting for a breakout. But it gets up here and you think it's going to break out, and you buy it and it doesn't. It comes all the way back down, and you're going to get stopped out because you should be working with a stop. And then you go, well, maybe I'll short it, and then it comes down here, breaks it just a slight bit, and then comes all the way back up. So box of dooms are truly that. And what the doom part is, it's what it's going to do to your P&L. Now, the other thing that I think is real important, we cannot ignore our P&L because we have to have limitations on what are we willing to give on the day. In other words, it's like you reach a certain level and that's it. You shut down, you walk away. Those are important things to bear in mind, and they're important things as a trader, an old trader, a new trader, a midterm trader. You still need to work with those. Neglecting important parts about trading will cost you your account, because you'll end up getting hit. I know I'm right. And then boom, you're not. Now, this was great because it did break the bottom of the box. So now it looks like it's going to go down. Okay. So we're going to wait to see if we can get a little bit of a rally. I'll take it here. Let's see what happens. And of course, I got way more than I needed. Why? Because I neglected to see how many contracts I had it set up for. So now I'm a little nervous. Okay, let's see if I can work out of this. Let's see if I can do this. I should be okay. Oh, almost. Do you see how these emotions are now going to come back in? Oh, come on, I need more than $20. Come on, you can do it. Then we start to cheerlead our own bad trade. This one, now, you want to get it back to what your size should be as quickly as you can, right? So 2 lots I can handle. But let's see if I get it down now. Okay, I'm going to get it down to 1. Oop, maybe you'll get the shot, maybe you won't. Now you've only got 1 contract, and your goal is here. That's where you think this trade should get to. I'm already going to put my buy order in there. And if it gets to there, that's great. Now, where are you willing to put your stop? Believe it or not, I'm going to put my stop right there, which puts me in a no-lose situation, but not total. So you've got commissions, but I don't want to give back on this trade. A, The size was an error, so I need to clean that up. Now we did. Now we're just going to allow this trade to work because that was my original target. Boom, we got taken out. Once again, you're still down, but you're making your money back. So secondary point, a lot of people, they want to work with a P&L here, but you always have a choice where you can put in where you don't want to see the P&L. P&L display, currency, none. You can put none. Hit apply, and that's going to be gone. You can keep it over here maybe, but you don't need to see it there. But I'm one of those people that I'd like to see it. So we came down. We now met that target a little bit more, but came back up to it. Now we're going to try to see about our next trade. And again, we're still dealing with emotions. Very likely, we're still dealing for the emotions that came about in this first trade. And we're still now gunning. We got to make it back. Plus, we got to make $800 because that's what we gave up. And this is, okay, I want to get back up. Get another, that's the one I want. I just wanted to double check. I'm making sure because I want to be able to answer questions if they come up. The only thing is I will add date. Oh, there is a right there in the chat box. Oh, okay. So often we're going to, if we're starting off and we basically have a negative S.E.T score to start our day, and we continue to move forth in trading, and you get into a situation like we just did where you took a hit, oh man, damn it, blah, blah, blah. Before you continue to trade, give yourself a break. Close your eyes, get comfortable in your chair, and reassess what's going on. And go through some calming exercises. They exist, they work. But you have to believe that you got yourself riled quickly. You also can calm yourself down. And there's so many outside factors that want to come in and contribute to the battle for your mind. And when they are screaming at you about, you got bills to pay, I can't buy food, I don't know how I'm going to pay my rent, I wasn't able to get it in on the 1st and now it's the 5th, and oh man, what's going to happen? Or, you know, I put my resume in, I got a nice reaction, but why aren't they calling me? These are all thoughts that are going to come in, and they're going to affect your decisions and to trade. Because maybe you lost your job in the pandemic. You've been unable to get your job back, but you have paid enough attention and seen enough videos and seen what other people are saying, how easy it is, and come on in, you put your money down. So you went to your last credit card, you took out a $5,000 cash advance, and you decided you're going to come and trade. How do you think that's going to set up your mind for trading? Not only are you living on borrowed time, you're living on borrowed money. And that, every time you make a mistake or you go down $800, you're going to climb the wall and you're going to end up trying to hang on to the ceiling. So the battle for your mind is real. And it's not airy-fairy stuff that when people are telling you that your thoughts, your sensations, and your emotions are going to control your actions. It's a proven fact. And many times, if we take an honest look at ourselves, it's going to be true. And the thing is that no one is coming at you. Maybe you were raised in, when, and excuse my language, when shit happens, we get going. I think that that's not a bad statement because, when the going gets tough, the tough get going. Do we really need to prove that we're tough? You're going to be able to do that every single minute you sit down to trade, and I kid you not, because your toughness for what you're attempting to do in the markets that you choose. Because basically, when you're trading futures, we don't control. So you don't have the control over direction. You don't have the control over who's coming in. You don't have the control over even knowing when they're going to come in and do what they do. We can give estimations. We can put blocks on our charts to say, this is a normal time. We can watch the market and determine. It's like, well, often you get algorithms that come in and move in the market at the top of the hour and the bottom of the hour. Those are usually pretty safe. But I want to tell you, in between, stuff can change. So even that isn't the easiest thing to follow. So we need to develop systems where we can then take care of the fear, take care of the doubt, quiet the storm going on in our head, and then see what's in front of us. Okay, how did I do that? I did that several different ways. First, people that do know me, you understand that I've actually been trading for well over 40 years. And in the very beginning of my trading, I was introduced to the Elliott wave theory. And that was a game changer for me because I then developed the skills of understanding where the market is in relationship to a long-term picture, a mid-term picture, a near-term picture, and then a day-to-day picture. So I can really give myself some breakpoints, some idea of what the possibilities and probabilities are going to be for the market each day. And I review that every single day. And in fact, I do a video podcast on that each and every day. So I post it at the end of the day, and it's for the next day. And we can look at an Elliott move. Say, for example, this move right here, that's a very beautiful, clean Elliott 3 waves. That makes its corrective because the market has already shown us that it intends to go up. And that was right off of that low this morning. 13,529, we'll call it. And that was basically a double bottom, and the market launched. And I'll be honest with you, I felt at this point the market was going to go down and put in a new low, a substantial new low, not just a little bit of a new low that it did there. Because I did have a scenario that would suggest that the market was going to drop down back below 13,500 before it roars to the upside. I was anticipating that the market would eventually pull, there would be a flood of buyers coming back in the market. It happened before I thought. And so I did get caught in this, and it cost me. And I'll tell you why it cost me. Because I kept thinking, no, I'm going to let it go up to this level and I'll risk, because I think the market's going to turn and it will go down and I'll make my money. So I added, just like we did here. But I did have to stop. When it broke here and it wasn't coming back, I closed the position and reversed. And I made it back. That's a key. recognizing and picking a point where you want to put your stop. Remember what I said? You enter a trade, where's your stop? Where are you going to declare that you're wrong? What has to happen in the market to change your mind that the market is not going in that direction? One thing that I use, moving averages. You can see them here. And when moving averages get in alignment, in other words, your short term and your 20 and your 50 are all headed and pointing in the same direction. As you can see here, here's my short term, here's my next short term, that's a 4, that's an 8, there's a 50. The 20 is angling up. So in essence, and your 50 is still above your 200, it's just kind of more flat. But in essence, that in and of itself is telling you buy it. And that happened right now. So that's a 5-minute chart here at the end, 2 minute, 1 minute. Because I use my 1 minute to really pinpoint entries and exits. So that really told you that when it started to break right there, 13,602. And if it started to, to come down a little bit, you add. Because you see that your moving averages are in alignment. Now, if you're battling the market and you're coming at this still with a short position, let's say, are you going to see that? No, your mind is being flooded with chatter. This is going to come back. It's going to come back. Damn you, market. You guys don't know what you're doing. Those damn algorithms, et cetera, et cetera. Been there, done that. Quieting your mind is virtually important to do. If you can't quiet your mind, the battle is lost then. Your mind will have gone over to, again, to reference back to the previous presenter, because I thought she was brilliant. You're going to cross over into the dark side. And once you're there, you're not going to hear your calm, still voice telling you, oh no, see, everything's in alignment, you really should be wrong. Does that mean that the market's not going to come back and pull back? Absolutely not. We know it will. But now, maybe you decided to get out there because you want to protect profits, or you hold on, and it comes down here. This is the 8. On the 1 minute, it's holding that 8. That's my break point. So maybe I'm going to say my stop would be at 36.10, let's say, because that's enough breakthrough that it likely is going to switch around. Or maybe you'll even use the 20, because I'm suspecting that this market should do a pretty good run here. At least on the 5-minute basis. So you might have to wait. But again, if you're trading off your 1 and your 2 minute chart, well, it should be just a pullback, but maybe it gets down to the 5-minute 8, 2-minute 8, and the 1 minute 20. Again, I'm using my moving averages to determine where I'm going to go and how I'm going to do it. So you see that on the 1 minute chart, the 4-day moving average is beginning to hook. That gives me a little bit more confidence that this may not hold or may hold. Right now, it continues to hold. So I'm going to build a position. Let me see if I can get it back. They dip it just again down to that level, because sometimes you don't get that opportunity and it just kind of flies. All right, let's see if I can get it at 14. We're just going to sit and we're going to wait. If you miss it, you miss it. I think we'll get it. There you go. All right, so now we're in. But where's my stop? My stop is going to be below 608, because I have to allow for it to at least come down to the 2-minute 8 and the 1 minute 20 to give the market room. Okay, so what's my goal? My goal is going to be, if I had 2 contracts, I take the first one off at 28.50. I take the second one, I'd attempt to take the second one off at 39.50. So if we get a chance to add, we're going to add. And what I'm really kind of showing you is, it's like, if I can do this with a calm mind, with a focus on the market, without any battle going on for my mind from the negative, then this is how you will perform much better. So we're still sitting in here. We know our stop level. Now, whether I have it in or whether I'm mentally putting the stop there, that's going to be up to each individual trader. If you trust yourself to get out, then you use the mental. If you don't, you put in a hard stop. You leave it because you must honor your stops. You must. It is not telling you, because here's the thing. You're sitting in the dark. The battle for your mind's raging. You put that hard stop in, it comes down, get hit, so the market turns and goes in the direction you thought. What do you think is going to happen? You idiot, you fool. Look, told you it was going to go up. I told you. That's not the name of the game. The name of the game is staying alive. Is you need to play by hard rules that you set. And if your rule is to get out and where you put that stop, then that's it. That doesn't mean that if it comes out, takes you out and flips, you don't get right back in. Because you can. Well, then you hear this argument, well, God, I don't want to build up commissions. I don't want to pay that much commissions. I'd rather pay the commissions than sit and lose $400. Now it's coming down. Boom. What do I need to do? You needed to get out. Why? Because it broke, and now it's sitting down here. Now, if it holds this and comes back up, well, then maybe I try it. Okay, that was my stop point. I'll get back in. And where's my next stop? My next stop is going to be just below this confluence here. As you can see, even on this one, it's starting to come down. It broke below its 20. So it busted the 8, broke below the 20. Now it's recovering the 8. Now it's going to be important that it holds that. If it can't, more than likely just going to try to get out. If I get enough room, I will put a stop in. I will put a hard stop. So if it does continue to rally, I want to put a hard stop in. Always protect. Always keep in focus that the market's going to tell me what it wants to do. I can't tell it. All right, so there we go. Now we've got some decent moves coming, and I'm going to put a stop in. And it's basically a no-lose stop. And now I can raise this. Where do I want to get out? Let me see if I can get out as it gets up to this new high, if it makes a new high above that level. If not, I'm down. And if the market continues now, if it goes back up there and goes back, I will move my stop up to the 8. And now you're working your trade. Now you're working your trade from a positive side rather than a negative side. I want it to move up far enough so because it'll drift right back. But that's far enough. I'm going to go right back. Now I'm sitting at 12. But if I get stopped out, I'm going to make some decent cash. I'm getting some money back. And if it does, I'll be okay if it stops me out. Because now I'm definitely in a no-lose situation. And I might just sit there, but I'm going to get ready to move I'm moving it up. Ooh. Yeah, I moved my stop up again. Somehow I accidentally canceled it. I'm not going to protect more money. I know what I'm looking for, but why do I need to sit in this? So the next bump in the road or the hiccup is going to be right there at the point of control. Boom. Now we're out. But we're making money back. Now, does that mean that the market won't go up? Not at all. But now we can reassess what's going on. Okay, maybe that stop was a little too high, et cetera, et cetera. But you're approaching it from a positive standpoint versus a negative. These are key aspects and elements in winning the battle for your mind by putting together a plan of action for when these negative things happen. My suggestion always has been you try to return to a calm place so that you can go in and you can do this without getting emotionally involved. It's sometimes by taking the small gains and moving forward keeps you in line to assess, where are we now? What are we doing now? How is it going now? Okay, we're starting to come off a little bit more. Maybe they're deciding they're going to sell a little bit. Maybe the market's going to do a little ABC. If that's the case, it's going to come down below 475 or 425, which was that low. That would be, is that worth the short? My original game was that I think it goes up, and I think maybe it still can. But we're going to let the market tell us. And we can still enter in each direction. But you have to determine, before you push that button to buy or sell, what's the plan? What are you buying this or selling this for? Are you scalping? In which case, I don't expect it to drop out of the sky now, but it's a scalpable short. If you're good at it, you go for it. We have tons of tools in our arsenals, folks, to determine what type of trade we want to take. Is it going to be more of a swing trade? I think that if this comes down, I'm going to be looking for more of a swing trade. I want to see one of these moves coming in. Now, maybe that was enough. We got down to that 50 and 20, the 50 and 200, the 1 minute 50 and 200, which before it held it and it's holding it again, tell you what, I'm going to take a shot here. See if we'll give it to us there. And my mental stop is a break below 425. That's what I'm thinking. But I'm thinking that, okay, maybe this should be okay. And if I get up to the 4 and the 8, I may look. Now, I think I'm going to want to put a stop in here at 750 because I really do. If I'm a new trader or I don't have a lot of money in my account, I want to protect profits. So I'm going to work with stops. And I didn't get to add 2 contracts, but we'll see. Let's see how this goes. Again, because your focus is not on being right or wrong, your focus is not on the negative, you're now able to focus on what this trade is doing and what the market is doing. It's reacting to bumping up against this 4 and 8, but it's now broken through it. Now the next hiccup is going to come at this point of control, which is at 16. Oh, it just dropped. Okay, not a good sign. So I'm gonna exit that trade simply because it could slip out, and I did want to get to even. So we're now break even in terms of this market, and because it slipped down so quickly, you couldn't move the stop up there. Now, oftentimes the market was just going to waffle around a point of control. We've got a point of control. It waffles around there for a little bit before it actually does get enough power to do what its intent is. But we can certainly come back down, all the way back down to 4, and then we'll try and enter again. If it really starts to break, I need it to break above 1775. And that should clear the path for that continued run up. And you can use Fibonacci in here too, by the way. And all I'm trying to do is give you enough tools to fight that battle of the mind. Because that's where the battle is. It's for your mind. It's for your thoughts. It's for your emotions. And if it wins, you're doomed. That's all I got to tell you. You won't find your success because it'll continue to pound you with lies. People ask, how do you stop the lies? Well, sometimes it's tough to work through the process of recognizing that they are lies. And why? Well, a lot of it has to do with how we were raised, where that input was coming from, how often it was drilled into our heads, how often we were told, and then told why. Oh, you're too stupid. Oh, you'll never amount to anything. Oh, you were terrible at math. You really flunked algebra. You flunked geometry. Well, how do you think you're going to work out these numbers? If we're constantly being bombarded with negative, eventually, particularly as a child, eventually you are going to believe that that is true about yourself. And instead of really respecting and honoring your own self, your own abilities, your everything about you. If we are believing that we're not intelligent, that we're stupid, that we're terrible with numbers, wow, that's going to have a really serious effect on you. Now, I'm going to open it up because we're getting close to when I need to finish up. And I want to allow some time if anybody has a question. And I just want to kind of throw some additional things in. I hope that what I've said is, going through the process each morning of what your S.E.T score is really is beneficial because it allows you to focus and see what status you're going to put yourself into when you begin to trade. And trust me when I tell you, negative emotions, thoughts, and sensations will produce negative reactions when you step into trade because you're already there. And honestly, we could sit and tell it, I'm strong enough, I'm strong enough, I'm strong enough. But don't try to prove that point stepping into a market that you're not prepared to do. So taking the time to prepare, and that's do your analysis, work out your points, your resistance points, your support points, work out what the scenario can be, and then go from there. Have your points already together that you'll know when you want to buy, when you want to sell. These are all important. Now, you can see here that this particular trade did work, but getting out was not a bad thing. But you see how it hung out. When it finally started to break, boom, you buy it. And now you're doing it with a clear mind. Now you're doing it with a little bit more conviction. Yep, it's going to move. And even if it's a scalp, boom, you got up to that first Fibonacci resistance at 23 and a half, 22 and a half, right, wherever it was. And maybe you got in at 17. Well, that's $5. On a one lot, that's $100. Good trade. And if you had two, then you held on. If not, see, it's coming back down to that, which is now support. Let's see if it holds. If it holds, take another trade. Now you're going to take and run it up to what ultimately should be 638.75 to 639. But now see it's starting to break down, but now we're going to let it see if it comes to the 4. Still can be a live trade, or it's all done. Many things. Again, I'm Michael Filighera. I am with LogicalSignals.com and also TradersHelpingTraders.com. I invite everybody to please check out my YouTube, where I post my video podcast each and every day, one on the NASDAQ, one on the S&P, and it reviews the trade of the day. It reviews what trading on that day produced. I never talk about P&L. I talk about market. I talk about where we are. I talk about what levels need to kind of come into play. I talk about the characteristics of each individual Elliott wave. So there's a lot of information that I'm tossing out there and giving people what I think is going to happen the next day. But I also give Fibonacci levels and break points. So when it breaks this, it's going here. When it breaks that, it's going there. And hopefully that's all very, very helpful. And then, so please go to my YouTube page, and it is TradersHelpingTraders.com, and subscribe. That way you will get notifications each and every day of a new post. And that's where I'm going to leave it for today, folks, because I know that my time is up. I thank you for hanging out with me. and learning all this good stuff. And I'm going to turn it back over to David.